Hi friends, welcome to Ask Investment Academy YouTube channel. If you are yet to subscribe to this YouTube channel, please subscribe immediately and click the bell icon to get instant updates on our future stock market related educational videos. Subscribe to my Telegram channel with the link given in the description to get more information about the stock market. Some of the traders requested me to make a video on the futures and options. That's why I started this option series. Before understanding about the options, you have to understand what is the main difference between the futures and options and why these futures and options were introduced into the Indian stock market. First of all, futures and options are called as derivative segment. So before going to the derivative segment, you have to understand what is a derivative. I will give you small analogy to understand this derivatives. Say for example, what are the products which we can make with milk? We can make ghee, or we can make paneer, or we can make curd. That means ghee, paneer and curd are the derivatives of the milk. If milk price increases, then ghee price, paneer price and curd price will also increase. If milk price reduces, then ghee price, paneer price and curd price also will reduce. Similarly, futures and options are the derivatives of the equity segment. So equity segment is the underlying asset for the derivatives, that means futures and options. If the equity segment price increases, then future price also will increase and call option price also will increase. If equity segment price reduces, then derivatives like future price will reduce and call option price will reduce and put option price will increase. That's why futures and option price depends upon the cash segment price. There are mainly two reasons why FNOs are introduced into the Indian stock market. The first reason to implement FNOs in Indian stock market is for positional short selling. Say for example, if you predict stock price is going to increase in near future, what trades you can do? Either you can buy that stock in intraday, or otherwise you can buy that stock in the delivery. If you predict like stock price is going to fall in near future, then you can short sell a stock in intraday. That means you can sell the stock first and later you can buy. But your broker will not allow you to short sell a stock in delivery. You cannot short sell a stock in positional. That means you cannot short sell a stock today. You cannot buy the stock tomorrow or day after tomorrow or after 1 week or after 1 year. Then how to do the positional selling of the stock? For doing the positional selling of the stock, exchange has implemented future segment. If you predict stock price is going to fall in near future, you can short sell its futures and you can hold till its expiry. This is the first reason why futures and options are implemented in the Indian stock market. Generally, for shorting a futures, you may require around 80,000 to 1,20,000 rupees. Most of the traders will not have that much amount of money. So for the sake of the small traders, exchange has implemented options. With the help of options, you can able to trade with 5,000 rupees to 20,000 or 25,000 rupees depending upon the options price. So if you are thinking market is going to increase, you can buy the stock in intraday, you can buy the stock in delivery, you can buy the future segment stock. If you are predicting like stock is going to fall, you can short sell the stock in intraday. You cannot short sell the stock in delivery or positional, but you can short sell the stock in futures. So these two trades are allowed, buying the futures and short selling the futures. Now we will understand the second reason why futures and options were implemented in the Indian stock market. Say for example, based upon your analysis, if you are thinking like market is going to fall by 10% in the coming week, you have two options. Either you can exit all your delivery holdings, otherwise you have to accept that 10% loss. I will give you small analogy to understand this. If you are holding 10 lakh rupees worth shares in your demat account, if you are predicting like market is going to fall by 10% in coming 1 week, then you have two options. Either you can exit all your 10 lakh rupees worth shares, or otherwise you can hold that 10 lakh rupees worth shares and you have to accept that 10% loss. If market really falls by 10%, then your delivery holdings also approximately will fall by 10%. Your 10 lakh worth holdings will decrease to 9 lakh rupees worth shares. Now you have third option. What is the third option? Instead of sitting quiet and seeing the market fall, you can short sell Nifty futures, or you can short sell Bank Nifty futures, or you can short sell most bearish stocks as per your analysis. And if really market falls by 10%, you can able to generate huge amount of profit out of that particular shorting trades. So invest 1 lakh or 2 lakhs into your demat account again and short Nifty futures or Bank Nifty futures or most bearish stocks. And depending upon the movement of the market, you might get around 50,000 to 2 lakh rupees profit out of your 2 lakh rupees investment. Now say for example, we'll take an average. If you have earned 1 lakh rupees out of your 2 lakh rupees investment in the futures and options, if market falls by 10%, your delivery holdings also will fall by 10%, but you have generated 1 lakh rupees profit out of this market fall by shorting Nifty or Bank Nifty or most bearish stocks. You can reinvest that 1 lakh rupees into your demat account and you can buy the shares. So comparing to the market has fall by 10% and your equity holdings were still at same amount. That means compared to the market, you are there in the profit. So this is the main second reason why futures and options were implemented in the Indian stock market. That means hedging against your delivery holdings. But sadly, almost each and everyone are using this futures and options segment for trading purpose. Very few traders are using these futures and options for hedging their delivery stocks. Understood? Now we will take some real-time examples and we will see what is the futures and options. If you want to buy stocks for delivery purpose, or if you want to trade in the market in intraday or futures or options or in positional trades, then Upstox is the better option. Why? Because in Upstox you can able to get free charts, free indicators, and you can see option chain also for respect to stock. Say for example, I will explain with the SBI. SBI as of now it is trading at 428.9 rupees. If you are predicting like SBI is going to increase to 440 or 435, then you can buy SBI in intraday, or you can buy SBI in delivery, or you can buy SBI in futures and CEs. If you are predicting like SBI stock price is going to fall to 420 or 415, then you can short SBI in intraday, or you can short SBI futures. When you have to buy call options and when you have to buy put options, you have to buy call option when you are bullish about a stock. If you are bearish about a stock, you have to buy put options. That means P's. So in the Upstox chart, directly you can able to see the chart, or you can see the option chain. With the help of option chain, you can able to predict how the stock is going to increase or decrease. Or otherwise, based on charts also, you can able to see whether the stock is going to increase or decrease. So for analyzing the stock, for futures or options like CEs or PEs, always you have to analyze the underlying asset. What is the underlying asset for the SBI futures and options? SBI equity segment stock is the underlying asset. If you want to predict whether SBI is going to increase or decrease in coming future, you have to analyze either by using the option chain, or otherwise you have to analyze using the charts. So Upstox charts looks like this. Here this is a candlestick chart. This is in 1 day time frame. So each candlestick represents price movement in that particular 1 day. And here you can have various kinds of views displays, either candlestick chart or bar chart or line chart, or so many kind of chart styles are available. And then studies. all indicators are there. You can apply any kind of indicator on this particular chart. So all these indicators are available at free of cost. All the technical indicator strategies are available at free of cost on this Upstox chart. These kind of charts, indicators are free for lifetime. Only thing is you have to open account with Upstox with very less amount of opening charges. It will vary from 100 rupees to 300 rupees and it is for lifetime, and you can use all these technical charts and indicators at free of cost for the lifetime. From now onwards, I will explain how to analyze the stock based on all the indicators using the Upstox chart. If you don't have Upstox demat account for the stock analysis, then you can open one fresh account with the referral link given in the description. If you can open Upstox link with my referral ID, then you will get all the features free for the lifetime. So that whenever I put any strategy here in the YouTube channel, directly you can apply that strategy in the Upstox trading platform, and you can able to analyze whether the stock is there in bullish trend or bearish trend, or when is the right time to take your entries, either buy entry or sell entry. Now try to observe, if you want to buy 1500 stocks of SBI, how much money is required? For intraday, you require around 1,28,000 rupees, and in delivery, so for buying 1500 stocks of SBI equity segment stocks, you require 6,42,000. You can see the estimated margin here. If you want to reduce this margin, if you don't have that much money with you, you can trade in the intraday. If you trade in intraday with 1.28 lakh rupees, you can able to buy 1500 stocks of SBI. If you feel SBA stock is bearish, then you can short sell this SBA stock in intraday for same 1.28 lakh rupees, but you cannot short sell the stock in delivery. Why? Because your broker will not allow you. If you want to short sell SBA and if you want to hold for more than 1 day, then you can short SBA futures. This is SBA July 2021 futures. This lot size is 1500. Either you can trade in intraday or you can trade in delivery. If you trade in delivery, then you can hold till July last Thursday. Or if you trade in these futures in intraday, then you have to exit that particular trade on that particular day only. So for buying this SBA futures or for shorting this SBA futures, minimum 1 lakh rupees is required. If you don't have that much amount of money in your trading account, then if you feel like SBA stock price is going to fall in near future, then since SBA is trading at around 429.8, you can buy SBA put options. What are the SBA put options available? Like 425 PE is there, 430 PE is available, 420 PE available, 415 PE available. Like that, so many puts are available. You can buy any of the puts. But for selection of this strike price also, there are many strategies available. You cannot short sell any put options, whatever comes to your mind. There is a proper study involved, how to properly choose the strike price and how to trade and how long you have to hold. Otherwise, trading in futures and options will be very risky if you don't have proper knowledge of technical analysis. Okay, SBA 425 PE is available at 3.2 rupees. That means for buying this SBA 425 PE, we require around 1500 into 3.2, which is approximately 4.7k rupees. 4700 rupees is required. For buying SBA 420 PE, you require very less amount of money, like 3000 rupees is required in intraday. For in delivery also same amount will be required. So directly, if you are thinking like SBA stock price is going to fall, you can short SBA futures. Otherwise, you can buy SBA put options. And choice of the strike price should be based on your technical analysis decision. If you think like SBA stock price is going to increase, then you can buy SBI futures. Otherwise, you can buy SBI call options also. What kind of call options are available? Either you can buy 435 CE at 3.05 rupees or 440 CE you can buy at 1.8 rupees. Clear? If you want to buy 435 CE, then how much money is required? 3 into 1.5. 3.05 into 1500, approximately 4500 rupees is required. So for the sake of small traders, these options are introduced into the Indian stock market. So as I already told, if you are bullish about a stock, you can buy the stock in delivery, you can buy the stock in intraday, you can buy futures. And also coming to the options, you can buy call options. If you are bearish about a stock, you cannot short sell the stock in delivery for a long-term purpose or for positional. You have to short sell that stock in the futures. Otherwise, you can buy put options. This is a put options. Not only buying of calls and puts are available, you can short sell the calls and puts. If you are bullish about a stock, the premium of call options will increase and premiums of put options will reduce. So that's why you can short sell the put options at the higher values of the price and you can buy at the lower values of the price once the stock price increases. Similarly, if the stock is bearish, you can buy put options. Not only buying put options is available, you can short sell the call options also. If the stock price reduces, the put premiums or put prices will increase and call premiums will reduce. Since the call premiums will reduce, you can short sell the call options at the higher value and you can exit at the lower value and you can able to make profit out of that. So in the next YouTube video, I will explain about what is the ITM, ATM and OTM options. So before going to the next session, I hope everyone should have Upstox trading account. If you don't have Upstox trading account, please open one Upstox trading account using my referral link to get lifetime free charts and indicators.